Hello, hello. Welcome to Latest Wealth. I am Kailash. I am entrepreneur as well as wealth coach. I am very much excited to share some wonderful information with you, my friends. As a psychologist, I have been conducting a lot of seminars. Whenever I go to seminars, I will be asking one question: how many of you want to become rich? You know, surprisingly, every person in the world, they want to become rich. Now my question: you want to become rich or poor? Obviously, you may be giving answer, yes, I want to become rich. Now, my mission is to make the people aware of their natural hidden potential. That's why we are producing these videos. My dear friends, in this video, you are going to learn 7 levels of investors. Let us start. My dear friends, actually, my name is Kailash. As I said, I am a big fan of Robert Kiyosaki. You might have heard about Robert Kiyosaki, one of the best authors, and he is the author of Rich Dad, Poor Dad, Cash Flow Quadrant, Guide to Investing. Like this, he has written some wonderful books which has motivated a lot of people to become entrepreneurs. I was also inspired by his wonderful works, and from teachings even I got inspired. I want to share some of his teachings also. Today the topic is 7 levels of investors. As Robert Kiyosaki was saying, there are 2 types of investors. One investor buys the investment, and second investor who sells the investments. Now you decide, you want to sell or you want to buy. Let us go into 7 levels. Let us start with 0. 0, 1, 2, 3, 4, 5, 6 and 7. Let me check it out, and you can also check out, and please watch this entire episode fully, because everything is interlinked with one more level. Suppose if you fast forward anything, you may miss link between 2 topics, then it will give confusion. And my dear friends, it's not entertainment program, so it will be a little bit lengthy, but pay attention and 100% try to understand. Let us start with the 0. The 0 level investment is 0 level investor. They are called 0. They don't have anything to invest. They are basically 0. They earn the money, and some people even they are struggling to earn the money. Whatever the money they are earning, they'll keep on spending. After some time of course, if you ask them how much money you are having in savings account, they say nothing. Because when you ask them, why to worry about future? Somebody will take care. And like this, the careless mentality, they keep on going. When they come into last stages, they are with the dogs. By the chance, if you are having that type of attitude, be correct yourself. My dear friends, wake up. Wake up. And there's a most dangerous type of investment, 0. And in India, they call as Anda number 1. That means 0. Now let us go to next level. That is investor level 1. We don't call as investors. Actually, they are called borrowers. You know, these borrowers has a critical mentality. Always they'll be spending more money than what they are earning. Suppose they are earning 10,000 rupees, they spend 12,000 rupees per month. Suppose they are earning 1 lakh, they spend 1,20,000 rupees per month. Always at any moment of time, if you see, their expenses are more than income. And they never become rich. Do you know that? And you know, almost 40 to 50% of population in India is like this only. Why is? Right from childhood, they have been wired to show the people we are rich. They want to go into show off, and they will be always purchasing some toys. When I say toys, people will be thinking, sir, what toys? Yes. And they will be purchasing toys like a television. They'll purchase the high gadget mobiles. Some people purchase the bikes. Some people purchase the cars to show the people that we are rich. But unfortunate, at the end of the year, they are with the dogs. And you know, like they're very much interested in maintaining the credit cards, showing the people that I'm maintaining 6, 7, 8 credit cards. Always they're busy in the paying EMIs, paying the EMIs. By the chance, if you are in the trap, please come out very fast. And there is also very dangerous quadrant. And at least in India, something is better. Whereas if you go to some other countries, especially USA, maximum people are like this only. Please don't go into show off. And most of the rich people, initially they don't look like a rich, but after some time they'll become rich. Whereas the show off people, they want to show the people like a rich. That's why when they buy the house, they'll buy high costly house. By paying EMI, they think it's an asset. My dear friends, actually for most of the cases, house is not an asset. That word also said by Robert Kiyosaki. When Robert Kiyosaki said house is not an asset, there was a lot of protest from the people throughout years. How house is not an asset? He said very nicely, my friend, classic definition. Please, you should also understand the difference between asset and liability. Asset means which gives money to your pocket, whereas liability, every month it takes money from your pocket. Now tell me, when you are purchasing a bike of 1 lakh or 2 lakh rupees, every month it is giving money or it is taking money from your pocket. Please come out of that trap. I want to give one word of caution about the borrowers. Borrowers means you may be thinking very low level people. No, my friends, these type of borrowers are there in every level. Just if you go into labor class, suppose they are earning daily 1,000 rupees per day. When they go for drinking and all, 100 or 200 rupees borrow money. Same thing in the clerk cadre and IT field officials also I have seen. Even though they are making lakhs of rupees per month, every month they are swiping with the credit cards. When they go for shopping, they forget everything, and especially when they go with the girlfriends, they forget everything. Then they'll borrow the money. And not only employees, my friends, I have seen big celebrities also. They have gone bankrupt because they have started borrowing the money. Let me tell you, for example, Michael Jackson, who was getting so much of money. Do you know that when he died, almost 500 millions of debt his family has to bear. Same way Mike Tyson, who was the highly paid heavyweight boxing champion. But what happened? He has gone bankrupt. Like this, if you see a lot of sports people also, even though they are making a lot of money, but when they start borrowing more money to show off, they are crushed. Now let us come to next category, savers. These savers, especially compared to throughout the world, Asian people are good savers. Especially in India and China, people save the money and they'll keep on saving, but they wonder why I'm not becoming rich. Because from grandparents, generations together, they keep on saving. And when they start saying to the children, they don't like, why I have to save, you have been keep on saving for entire life, what you have achieved. So I don't want to save. That's why savers' children, they have become borrowers. My dear friends, I'm not saying saving is bad, but one thing they are doing the mistake is, they are saving. At the end of the year, they are spending entire amount. For example, if you see one middle class family, he will be keep on saving 10,000 every month. By the end of the year, he will be having 1,20,000 rupees. Immediately what they will do? Oh, I am having 1,20,000 rupees. Let me purchase one big LED TV. Now tell me, whether they are purchasing the asset or liability. They think it is an asset, but they are liability. Of course, they are better than the borrowers. Some money they will be keeping. Then when they come to retirement age, at the time they start saving to their children. Hey, go to school, study well, good marks, get better pay, get good job, have a handsome salary, save more so that your life will be settled. Say next generation also same thing they does. My dear friends, that's what they teach in the schools. And this new generation, actually saving is very good, but saving and spending is not good. Saving for investment is good. Yes. Now let us go to next level of investors. The fourth level of investor is accredited investors. In this accredited investors, there are three types we can divide. Actually, these people are having high self-worth, like some doctors, some lawyers, some of the professionals, some celebrities. They'll be making a lot of money and at least they're having some idea how to invest. But there also we can divide people into four category people. One category is, I don't bother, because when they're making more money, like some of the doctors, some of the lawyers I have seen, why don't you go and invest? I say, no problem, I am in the limelight. My life will goes like this only. They think, my dear friends, please remember, you may be any good player, like a Sachin Tendulkar, you may be a Virat Kohli, but one day you have to retire. Same thing in the cine field also. Any celebrity, any doctor, you may be famous in your area for some time, but one day some other person will come and beat you. So before some person beat you, wake up. And one is, I don't care about category in accredited investors. Second category is cynical people. Means they are worried about investment. When they think about investment, they think as if one big snake is coming. Of course they save, but they don't want to learn anything. They don't want to do anything in the investment. The third is gamblers. Yes, my friends, in my personal life, I met a lot of people, especially from film industry. I met a lot of film industry and sports field. They make a lot of money and they start doing gambling with that money. Gambling doesn't mean that they go to race courses. Just simply they put some money in the real estate, they put some money in the stock market because they follow the advice of their family members and friends, so-called well-wishers. They started gambling with that money, hard-earned money. One fine day, they lose all the money. At the time, they start saying, "Arey, what happened?" And out of this, there's accredited investors. Some people are there, little bit calculated investors. Calculated means they are cynical, they are not careless. Simply they hand over entire amount to some particular person whom they believe, oh, he's a smart person. Of course, that's also little bit, up to some extent, it's good. And these people having a little financial knowledge, they'll recruit some fund managers, financial advisors, or some wealth coach. If they analyze correctly and if they give it to wealth coach, I have seen some of the wealth coaches, they made their money in multiple ways. That's good. This is accredited investor. Just check it out. And next level is the fifth, qualified investors. Qualified investors means they are qualified to invest. How? Let me tell you, my friends. Investment is just like one examination. When you are going for examination, if you prepare well, what will happen? There are chances that you may pass in the examination. Same the way these people are called qualified investors. If you want to become qualified investors, as already we have said in our other programs, if you want to go and watch some other videos, full description we are given. However, I am going to give some highlights of that one. If you want to become qualified investor, 4 things are needed. That is 4 E's. First is education. Second is experience. Third is excess cash. The fourth is the very important emotional balance. Let me repeat. First is education, experience, excess cash, and emotional balance. The 4 is, if you're qualified, then you are treated as a qualified investor. Let me give about stock market. In the stock market, qualified investors, how they do is, they don't gamble the money. Either they may be fundamental, they do pick the stocks by doing the fundamental analysis. Fundamental analysis means, however, we are going to prepare one more episode on fundamental analysis. Please watch that video. I'll brief out. Fundamental analysis means they check it out, how the business is there, how the management, whether this industry grows or not, whether the future is there for this industry, like this, and they go with the PE ratios and the fundamentals of the company. Next, technical analysis. Technical analysis means they go with the chart, they go with the price, they go with the volumes, how much volumes they have been, what is the stock price, what will be the future price of the stock. Like this, they do some analysis, either fundamental or technical analysis. With this help, they start doing investing. Generally, most of the people who invest based on fundamental analysis, they are called investors. They look for long term, whereas the people who take the help of technical analysis, they are called traders. They go with the short term, like they'll purchase today, after some time they sell the stocks. These are called qualified. You check it out. You are in the qualified. My friends, best thing, if you want to make more money, first come into qualified investors. And even though you are not making earning more money, you can, by investing that money, you can become rich. This is qualified investors. Especially for most of the middle class people, this avenue is always open. Now let us go into next level, sophisticated investor. See that sophisticated investors, actually you can come to sophisticated investor level from qualified. Very simple. Qualified means you know how to analyze the stocks, either by technical analysis or fundamental analysis. Whereas the sophisticated investors, what they do is, earlier qualified investor they'll be doing individually. The sophisticated investors, they gain some team. They start teaching their team with set of rules, systems, templates, tools. They create structured portfolios, and when they become the sophisticated investors, there they come to selling the investments. See, the qualified investors, they buy the investments, whereas the sophisticated investors, they start selling the investments. See, my friends, here 0 to 4th level, they are buying the investment. After 5th level, you will become the seller of the investment. For example, by the chance, if you know the mutual funds, what mutual fund? Mutual fund is nothing but one fund company. For example, Reliance or Motilal Oswal. Some people, they create the mutual fund, you are purchasing that mutual fund. Yes, that means they are selling their investments, you are purchasing. Like I can give you, for example, if you go into any apartment, around 300, 400 houses or flats are there. The builder constructs the apartment, he is selling that investment, you are purchasing their investment. Clear? So here what will happen, you will be eligible for sophisticated investor. When you are sophisticated investor, then the team will be there. Then you will be making a lot of money, and the money start multiplying in n number of times. There you are more seasoned. It is not like a gambling, it is not like a speculation. There they go with the probability and they go with the statistics. They go systematically. For them, the safety is more important because they are taking the money from investors and they started investing that money into stocks. And as an investor, they always remember the Warren Buffett's, the world's richest person. He said 2 rules. Rule number 1, never lose the money. Rule number 2, remember the rule number 1. These people, they follow strictly that rules. So that's why they started making the money, they start selling the investments. Now let us go to next level. The next level is inside investors. Inside investors means nothing but you are become a businessman. Yes, my friends, you are become an entrepreneur. Here what will happen? The company, they grow into such a high level, people will start investing in that company. And they started investing in some other companies also. And here they will become very, very safe level game. The game is very high level, and there they start learning about tax laws, they start learning about government rules, they start predicting, they are having a big team. Here in the inside investor, I will give one small example. Whereas if you are purchasing the stocks, any stock if it go, you will go and purchase with the market price, right? In the market price means, suppose, take example, some XYZ company stocks, you are purchasing for 250 rupees. If you go and check it out, the stock base price may be 10 rupees only. Okay? So that company's base price is 10 rupees, but you are paying for 250 rupees. And whereas the inside investors, when they enter into that company, they will be purchasing the stocks for the price of just 2 or 3 rupees only. So what will happen, whether the stock market fall or rise, if the stock market rise, they get multiple percentage of income, whereas the retailer investors, they may be getting 10%, 15%, 20%, whereas the inside investors, they will be getting their returns are unlimited. It may be 50%, 100%, 200%, sometimes 300% returns also. So that is the level of inside investor. Now let us go to next level. Next level is on the top, 7th, the ultimate investors. Ultimate investors means when they start the company, for example, Bill Gates, Apple company, Amazon, they have become such a big, people are interested to invest in their money, and so that they start investing in some other projects also. For example, if you see Jack Ma, China's richest person, he started investing in Paytm, and by seeing that, a lot of people will start investing. Now they started investing in some business, so that business will start selling the investment. Now their business is to create the business. So that is the ultimate level. My dear friends, let me revise once again all the levels of investors. You check it out. At this moment, where are you and what is your dream? If you want to go into next level, we are ready to help, and you can log on to our website www.happykailash.com. You can log on, we will give the details. My friends, let me give you once again levels of investors. 0 is nothing, 0 level, don't be in that. 1 is borrowers, who brings money from outside and they want to show the people rich, but they are not rich. Like this you might have seen a lot of people. Next is savers. Your grandma, your grandpa, or some of your relatives may be savers. Third is accredited investors. In the accredited also 4 types are there. One is I don't care. Some people are cynical, some people are gamblers, and some people are calculated. Next, 4th level is qualified investors. Qualified investors, they go with the systematic analysis, either fundamental or technical analysis. Next is sophisticated investors. These people, they start selling the investments, and as well as they buy the investment. Both things they will be doing together. Next is inside investors, who are the entrepreneurs, and as well as some big investors. And next is ultimate and top level is ultimate investors. Now choice is yours, where you want, because it is your life. Use it or lose it. My dear friends, hope you have enjoyed this session. Hope this today's episode was very, very useful for you. Please, if you like it, please share with your friends and relatives, because this is a financial knowledge you can give and share with your friends, and they will remember your name for lifetime. If you are a new subscriber, please subscribe to our channel. Please press the bell icon, and we are going to create some wonderful videos on wealth creation and stock market, mind, money and market, so that you will be getting updates. And thank you very much. Till we meet again. Enjoy every bit of life. Have a nice day and bye-bye. Thank you very much.